Monochrome Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monochrome.
Good morning. Welcome to the Global View on this Tuesday. I'm Andrew Gagan. Thanks for joining us here at AusBiz. So let's take a look at what happened overnight. Little news for markets to trade on. European equities ended slightly weaker as the makeup of a new French government remains uncertain. Meanwhile, on Wall Street, another day and another record for the Nasdaq and S&P 500. Buoyed by a slowdown in US jobs growth, which enhanced the prospects of an imminent rate cut. Investors are now waiting on this week's inflation data and the beginning of quarterly earnings season. Boosting the broader market, Nvidia, Intel, Dell and Advanced Micro Devices. Paramount Global shares fell after it agreed to merge with Skydance Media, with the deal seeing Paramount and its film studio, along with its CBS, MTV and Nickelodeon TV networks, merged with its financial partner on several major film releases. And Boeing gained after the aircraft manufacturer agreed to plead guilty to a criminal fraud conspiracy charge and pay a fine of more than $243 million following a Justice Department investigation into two fatal 737 MAX crashes. Well, the latest survey of consumer expectations by the Fed Reserve Bank of New York has found inflation expectations have eased to 3% in a year from now, 2.9% by 2027. And bond yields have weakened, with the 10-year at 4.26% and the 2-year at 4.61%. Treasuries also reflected moves in European markets, where French government bond yields fell to two-week lows after Sunday's election resulted in a hung parliament. The euro slipped as French President Emmanuel Macron asked his Prime Minister to stay in the role for now as negotiations begin to form a new government. The US dollar strengthened and the Aussie is trading at 67.4 US cents. So let's get across all that action stateside. Steve Selznick is Chief Strategist at Interactive Brokers. He joins us now. Steve, welcome to you on beginning of your week, of course, and the 35th record this year for the S&P 500. Who's counting? Is this as good as it gets? Because I also note that the first 2 weeks of July are historically the best for equities.
Good morning, Andrew. Yeah, that is an interesting phenomenon. You know, you hear the term summer rally from time to time. That certainly epitomizes it. I think it's because so many people take vacations. I think it's because you've got the holiday in there. There's also, the old saying, don't short a dull tape. Meaning don't rush out to sell into a boring market, and that's pretty much what we've had. That may change as the week goes on, but certainly last week there were few catalysts, and since the momentum had been to the upside, at least in the stocks that matter these days, then up and at 'em we went.
So we do have some key events this week to look forward to, which obviously investors are hinging on, as far as testimony by Jerome Powell before Congress and also that key inflation read.
Yeah, we've got Powell testifying, tomorrow, Tuesday, our time, and Wednesday. Tuesday's in front of the Senate, where you get a bit more high-level questions. The senators tend to think a bit more broadly, or at least their aides write more broad-based questions. Whereas, Wednesday's in the House, which of course, number one is a bigger body. It's 435 versus 100. So you have 4 times as many members for the most part, and also a lot more regional concerns and a lot more very specific questions get thrown his way then. So tomorrow, in his prepared remarks, which probably will echo some of the stuff he said last week in Portugal, and the questions, that's really the time we're listening for Chairman Powell. Then, of course, we'll find out later whether, later in the week, Thursday and Friday our time, about CPI and PPI, both of which, if they come in as expected, could add more to the disinflationary rhetoric that we've been hearing.
So, Steve, overall, what are your observations of what you're seeing with the US economy? Of course, that also comes off the back of that jobs read we got on Friday, indicating there is a slowdown underway there.
There's definitely been a bit of a character of slowing down. The question, becomes how much is it like disinflation? What's the pace? The economy is definitely not expanding at the pace it was. Um, are we shrinking? Certain measures like ISM and some others certainly imply that the economy is not growing, or at least sectors of it. Manufacturing is a bit weaker than services. The payrolls numbers, the headline was good, but then the revisions actually made it seem a bit weaker. You have unemployment for the third straight month, inching higher, but again, still at levels that would be the envy of previous administrations. So it's a bit of a mixed picture, and that's why my contention is that we're going to really have to be very focused on the Fed meeting at the end of the month, July 31st, because the question to me right now is, to what extent does the Fed believe that the economy is slowing down? Do they recognize it? Again, not necessarily slowing, but growing less quickly. And how troubled are they by it? And are they, willing to sacrifice a little bit of their fight against inflation um, in order to prime the pump with the economy? There's also a couple of complicating factors. You have the July meeting, as I mentioned. There's basically no expectation that anything is going to happen from a policy point of view. It's about a 6% chance. The market's sort of it's been anticipating somewhere between 75 and 80% relatively consistently for a cut in September. But there's also political considerations about that, because whether he does or does not cut rates, one side or the other is going to accuse him of favoring the other side. And he claims he doesn't watch politics, but I think anybody who owns a television set or a computer has no choice but to be absorbed in the political drama that's here. So then the question is, does he wait till November? At which point the next Fed meeting is actually literally the day after Election Day. So it's a bit of a challenge, and I think this bears watching because, again, remember, as much as people want to talk about rate cuts, as much as we think it's a good thing to have rate cuts, in general, it's not a bad. It certainly is a good thing, a more accommodative monetary policy. We've gotten this far this year as expectations for rate cuts diminished, and as the economy progressed faster than expected. So what happens if the signals point in reverse? Does that mean the market reverses, or does that just mean, okay, we'll focus on something new this time? We've got another excuse to rally. That really just becomes the big questions that I'm looking toward.
Now, Steve, also we're heading into quarterly earnings season, getting underway, of course, with the banks, which I know you're never chuffed about. Nonetheless, more broadly, what are your expectations?
Well, right now, one of the things that's very interesting to me. Well, first, of course, you mentioned my dislike of banks going first. The one thing I do like about banks going first, the one and only thing I like about banks going first, because again, no one else depends on trading profits. No one else is that interest rate sensitive. You might get some color from Jamie Dimon and friends, the various bank CEOs, telling us what they see from their customers, because these biggest banks do touch pretty much every type of customer. And we'll get a sense of whether there's demand for lending, what they see in terms of economic robustness or not. Jamie Dimon has been a bit cautious, actually, compared to many of the others. So let's hear what some of them have to say. Another thing that's been interesting as we head into earnings season is there have been very few negative revisions. There haven't been that many profit warnings or that many analysts cutting guidance, which does, on the surface, that's great, because if they do meet these expectations or even exceed them, and remember, it's typical for somewhere between 70 and 80% of the companies to exceed expectations, just because I think, the CEOs are very good at managing their analysts as well as their businesses. But if we start to get to a situation where too much is expected, And these companies pretty much only deliver in line to maybe, the usual penny better and don't really raise guidance. That to me could be a bit of a concern, particularly if those companies are among the mega cap techs that are driving the bus. Nvidia, of course, the first among equals, is not actually for another month. They're sort of an off cycle. But later this month, we will hear from all the other, companies that matter. Let's say Microsoft, Amazon, Apple, Google, et cetera. And let's see if this helps. Because one of the things that bothered me in the last couple of weeks was that Micron released earnings that really should have been fabulous, that beat on every measure, except that when they guided higher, it wasn't guiding higher enough relative to the whisper number, not even to what the published expectations were, and the stock sold off. So, I just sort of hope we haven't outkicked the coverage in that regard.
Well, I dare say this time next week, Steve, we're going to have a lot to unpack. Obviously, with earnings season underway, and of course that inflation read, and also, of course, politics. Who knows? 1 week in politics, just how long that is. Thanks for joining us from Interactive Brokers.
My pleasure as always, Andrew. We'll talk to you next week.
Cheers. Righto, let's come back home before we get underway locally. This is where we're expected to begin. As you can see, SPI futures in positive territory there, up around 1/5%. Stay with us because the open is just a couple of minutes away.